we start with Apple under pressure. It has been bad news and then more bad news since the tech giant hit an all-time high on October 3rd. The stock has been in meltdown mode, now down 18% from the high, nearing a bear market. Apple has lost almost $20 billion in market cap as worries over shipments and demand have investors questioning that trillion-dollar valuation. So all this as the stock market, as a stock, I should say, closes below its 200-day moving average for the first time since April. So is there more pain ahead for this tech giant? This guy was supposed to be the defensive tech stock in the market.
And a week or so ago, I think I went up to the smart board and did a power pitch.
Not so smart, huh?
In Apple, and it turned out to be, for a day, it looked like a genius, and now obviously, $8 later.
I thought you pitched it as a short. To be honest with you, I thought you pitched it. So kudos to you.
Give me a little great job. I'll meet back to you. No, but no. So if more pain ahead means another $7 or so down to 185. Yeah, there's more pain ahead. If 185 is not a big deal, then I think the stock is fine here. I understand trillion-dollar valuation got on everybody's radar screen. I understand that they're not giving guidance in terms of hardware and what they're selling. I get all that, and I understand why that can be deemed as a negative. But I don't think Apple changed from 2 weeks ago prior to that announcement to where the company is now. So I still think it makes a lot of sense right here.
Well, the difference is we've seen some people, a lot of their suppliers say, listen, you know what, things are getting cut back. Nikkei reported on November 5th that the XR isn't selling as well. They're telling Foxconn to cut back on development there. So that's the difference. It's not as clear as it used to be. We're seeing that their business is slowing down. And to add insult to injury, Apple went in and said, you know what, we're not going to show you. We're not going to show you.
We've seen that. We've seen that supplier data though be faulty. But to your point, it's never been coupled with Apple saying we're not giving you guidance anymore on the hardware anymore,
and a downgrade. I mean, essentially, and downgrading fourth quarter, and pointing out that emerging markets actually, and a FX headwind, which I don't really care about that, frankly. I care a lot more about them saying demand for the XR, for that lower price phone, which really is where they're going. And thank goodness for the XS and the Max and all these. I'm getting confused, by the way. I'm getting confused. But that's supposed to mitigate what's going on. And I think in the short run, it actually does. The bottom line for Apple in terms of iPhone shipments is you're going to basically be peaking over a 3-year period or basically doing nothing over the 3-year period. If you look at essentially where we're going, 2018, 19, 2017, 18, and 19. And that's a problem.
I think the biggest thing that could come out of here as a tailwind, if this ever recovers from here, is the services number.
If this ever recovers from here.
Well, I say it's sort of, I mean near term. Near term, if we're out of this sort of, I don't want to call it a death spiral, but it has taken a hit pretty quickly for the Apple, which was the growth and the value as you led into the segment. Right. Yeah. It's $37 billion as far as service revenue. So if all of this comes out to focusing more on that versus iPhone sales, I think it's a tailwind, and ultimately it's a better thing for the company.
Do you think investors are using the bad news from Hanhai, from Japan Display, from Lumentum, from all of these various Apple suppliers as an excuse to sell the last standing tech stock in the face of a China trade war and not knowing what the impact is going to be, not knowing where global growth is?
Yes, and I think it gets
get rid of it.
Right, and it gets exacerbated by the fact that they changed how they're giving their units out. They're not giving it out anymore. So that makes people much more uncertain, and they're much quicker to sell first and ask questions later.
Implied in my question, though, is that there's a fundamental story still here for Apple, unless you believe that demand is truly threatened here. That this time the supplier data is something to read through to Apple itself.
So it's very important to restate a thesis on Apple, which I think did exist 2 weeks ago or 2 months ago and is still very much alive today. And I still believe it very much. First of all, on the capital market side, this company is going to continue to buy back stock and actually possibly increase the dividend, certainly do everything they can actually to give $50 billion a year in free cash flow back to the investor. The second thing is that the installed base is enormous, that the service revenue, maybe you're a little disappointed at where we went in the last quarter, and some of that is fluffed up by healthcare, some of that is just new screen repairs. Bottom line is this company is getting a better multiple. That was very much the story. It's not a hardware company. Well, they want you to right now say they're not a hardware company. We're no longer going to guide on units, treat us like a software company. No, we cannot. But I still think this company, I think at these levels, is very interesting. And yes, it is a market proxy right now.
And there are growing pains associated with trying to make that transition and doing it in such a way that they did. I think the way they gave it to the street wasn't, they could have done it better. that notwithstanding, I mean, you saw moves not of this magnitude, but go back to the beginning of the year when the stock went from 180 down to 160 and pretty much
and challenged the 200-day two other times this year.
Two other times this year. Now, this move has been over a longer period of time, and it has been more dramatic. But this 190 level is actually where we took off from and went parabolic from back in August. So, listen, I understand there is more pain. It's been a very tough trade to be in. You know, Apple's one of those stocks that everybody think goes up in perpetuity, and this is obviously painful. But I do think it's at levels now that make a lot of sense.
I mean, the 200-day was challenged in February and in April, and it was only below the 200-day for a handful of days. We're just below the 200-day now. It's 193.36 is the 200-day. We're below it now, but we're just a hair below it. Now, it doesn't matter for technicals. Once you break a significant level, it's broke. It doesn't care to what degree you break it. But once again, we were only below that the other two times this year.
So does that mean I should be worried about that, or I should not be worried about that?
You should be worried about it if it lasts longer than a week below the 200-day, because that's what we've seen from the February sell-off to the April sell-off. We've only seen them a handful of days below the 200.
Here's a bigger question, though. If we've lost Apple, even if it's for a finite amount of time in the short term, does that mean necessarily that the markets can't find footing as well? You got the biggest stock with a huge ecosystem around it, but we have semis, suppliers, et cetera, and it may be a proxy for consumer spending.
Precisely. That is the question that you have to ask. And I think, given everything else that is going on around the world, to look at Apple and say, okay, wait, their orders are slowing down. The global growth story has decelerated at the very least. So maybe, yeah, you know what? Maybe things are not as great as we thought. I agree with everybody else. So the good news is here, I think people are going to overreact to Apple here. And somewhere around 185, you probably get a really good trading opportunity to pick it up.
In terms of the broader market, I don't think it's pretty clear the market did not trade particularly well today. That's stating the obvious, but more so in the fact that in the wake of yesterday, which was a miserable day, the market was not able to hold on to a bounce that it historically, when I say historically, the last 10 years it typically has. So I still think there's further room to the downside. What would be great, though, if we could bring on somebody that would sort of give the bull case for the broader market. I think it'd be balanced.
Yeah. I was going to say something, but now at this point, I don't feel like there's really any room for me to get in the way of that.
Of a guest who's bullish?
So now, let me simply say that I think it was disappointing today as we lost Apple. The big story stocks yesterday were Apple, Goldman Sachs, and then there was oil. All three of those were weaker again today after huge and oversized pullbacks yesterday in oil with a dramatic move today. That should be of concern.